This week we're going to see a lot of financial bank earnings. We started this on Friday with some of the major banks. We're going to have some more major banks this week, as well as some regional banks really starting to kind of report their earnings. But here's what you need to know before the bell this morning. Again, when we take a look back over the beginning of this year, regional banks under a lot of trouble because of these higher interest rates have led to a decline in the collateral values of the banks. This is what led to the takeover of Silicon Valley Bank, Republic Bank, etc. Are those declines in asset values. Of course, since then, we've also seen a lot of monetary outflows from these banks as customers were moving deposits to bigger banks, also moving money into money market funds. And of course, the Federal Reserve had to come in, bring in their BTFP backstop, which was funding, provided loans to these banks against their collateral to keep them from going under. So that seems to have stabilized a lot of the banking sector. But here's the question you have to ask yourself about banks. Can the environment get any better for banks? At 5% interest on the Fed funds rate, credit card interest rates are now 22%. Net interest income is off the charts for these banks. They are making a ton of money. The banks that were reporting earnings on Friday noted very, very big increases, up to 50% increases in net interest income. That's the spread between what they borrow at and what they lend at. And despite that, banks actually sold off on Friday. So, how does this get any better for banks in terms of an environment for banking? Of course, they do have risk of credit card losses at this point, risk of credit card, commercial real estate issues certainly sitting there on the books. Not denying that at all. But in terms of their income run, you've got the market going up. If you're doing investment banking like a JP Morgan, etc., investment banking revenues are rising, net interest income is rising. And here's the thing about this. If the environment can't get really any better from a revenue side for banks, financials are a big sector of the S&P. It's going to be a challenge for the S&P to continue to rise indefinitely without financials participating in the markets. And again, yes, financials have done better since August. Of course, nothing near what we saw for technology stocks in particular. But yes, since the October lows, we have certain, and really kind of since March, where we saw this kind of sell-off in the banks because of the whole regional bank issue, they have certainly recovered here a bit, but still lagging the market overall this year and still putting out a negative return for the year so far. But importantly, when we step back and look at banks on a longer-term basis, banks peaked back at the beginning of 22 and really have not done a lot. Since they bottomed really kind of in June, July of last year. We've been in this kind of big trading consolidation range. But again, the environment for the income side for banks is very good right now. Yes, there's certainly risk to the bank stocks because of commercial real estate, because of kind of what's happening with credit cards, potentially threats of the economy, inverted yield curves, etc. Certainly some pressure on banks. But again, when you take a look at what they're reporting right now, net interest income increases, etc., it certainly seems like the banks should be doing better than they are. But they're just not getting a lot of love because at the moment it's all about technology. It's all about those top 7 stocks. But the real point here is that we need to start to see banks improve more. We need to see a better improvement in banks. Banks make up a very large position in the S&P 500 on a weighting basis. So if the markets are going to continue to improve, technology can't be the only sector really kind of driving the markets higher. We need to see that broaden out, pick up in these other sectors, see financials begin to gain some traction here. Again, we're long a couple of small regional banks right now, but again, we are looking for opportunities here for some more improvement as they come along. That's what you need to know before the bell this morning.